The cost of the spill is mounting for BP, and so is speculation about the company's future. The White House just handed BP a bill of almost $100 million for ongoing response and recovery efforts. But that total could be just a drop in the bucket of what may be a multi-billion-dollar price tag for BP. So this morning, a closer look at what that company could do to raise cash quickly to pay its bills, and also what that might mean for investors. At investment advisory service Wealth Daily in Baltimore, BP is a pretty regular conversation starter. And analyst Adam Sharp says stockholders and pensioners, you shouldn't be too worried about BP's ups and downs in the market.
I don't think it should be a major concern for pension funds. Any single fund shouldn't hold more than about 3 to 4% of their assets in any single stock or bond. So as long as they're properly diversified, it shouldn't be a major concern.
Yes, BP did cancel its most recent dividend payments, but its coffers are far from empty.
BP right now does not need cash, but BP is preparing itself for a big day that they need the cash, whether $5 billion or $10 billion that will have to be paid within a specific time, and BP has to be ready for that.
And that process may be underway as we speak. Last week, BP sold some of its oil pipeline and storage assets to Magellan, a deal worth nearly $300 million. But the biggest sales would probably involve BP's oil and natural gas fields.
There's a lot of potential areas that they could look to sell. In the normal course of business in a given year, BP sells as much as $3 or $4 billion worth of assets anyway. So saying they're going to sell $10 billion really isn't much of a stretch for that company.
In fact, one possible deal in Alaska could bring in more than that. There is now speculation BP is considering selling half of its stake in the U.S.'s largest oil field, Prudhoe Bay, a sale to Apache, potentially worth $11 billion. But some of BP's offshore assets now seem to be losing value in the wake of the Gulf disaster.
Take for example, some of the deepwater Gulf of Mexico leases. Okay, they have high upside potential, but we know now what the downside risk could be. So that could balance or curb some enthusiasm. 60 days ago, the same assets could have been worth a lot more. Maybe now it's worth a lot less.
Elliot Gue says buyers will be especially interested in BP's overseas assets. The company holds proven oil reserves in Argentina, and apparently China's biggest oil producer is already interested there. Also, it has a natural gas field in Vietnam and a pair of joint ventures with Russian oil and gas companies. But revenue raised from these sales could end up staying overseas.
What you see with a lot of these big oil companies is they'll sell some of their non-core assets, things like the joint ventures and whatnot that we just discussed. And at the same time, they'll redeploy that cash into expansion elsewhere. BP may want to spend more money on other areas of its asset base that it considers more core. Perhaps its field in Iraq that it's ramping up a lot of spending on.
A less likely scenario, though still possible, is an outright acquisition of BP. Someone like ExxonMobil is certainly big enough to buy the entire company, but Geit and Gue agree that probably won't happen anytime soon, given BP's open-ended liability in the Gulf. In short, BP's parts, its assets, may be more valuable than the whole. Back in Baltimore, Adam Sharp shares that skepticism about an outright acquisition, but he does say investors and pensioners probably ought to be pulling for that big BP sale.
Yeah, an outright purchase probably would be a good thing for BP shareholders, but I don't see it happening. There's too much unknown liabilities associated with such a purchase, so I don't see why ExxonMobil or Shell would want to take on all those risks.
As both Fadel Geit and Elliot Gue told me, it is normal for companies the size of BP to regularly buy and sell assets every year. It's simply a part of doing business when you're that size. And perhaps proving that point, on Thursday, BP announced it was buying a cellulosic biofuels business, a purchase that came at a price of $98 million for BP.